Hey, what's up, everybody? It is Wednesday, July 9th, 2025, 6:53 p.m. Hawaiian Standard Time. I would like to tell you my secret strategy to becoming a full-time trader, which I will be actually doing in roughly a little less than 2 months, assuming everything kind of goes according to plan. Worst case scenario might be 3 months, but on this several year long journey, which technically started 2007 sometime, really picked up a lot of momentum around 2023. Here we are coming to a pinnacle of only trading for a living. And what has really helped me is something that might surprise you is this Google spreadsheet, this monthly budget. Maybe going back as far as 2015, 2018, somewhere in there. I can't quite remember, but it has been several years ago. I started monitoring everything that I spent, every single penny that I spent. And then I also usually about twice a day, once in the morning, once at night, I log into any type of account that I have and do something just like this. And I'll put down whatever the number is in that account, and then the time right now, 6:56 p.m. So let's say this is a checking account. And then let's say this is a credit card. I log in, check to see the balance of my credit card. And let's say if that is I owe whatever that number is, then putting the time. And I personally, as soon as I have something post on my credit card, I pay it off. So I'm not even waiting the full month. And I'm not going to explain why, but it works really well for me. And so I'll take this number minus this number. If this is the account that I'm going to pay this balance off on, and then I'll put whatever is left in here, whatever that number is. After that processes, post, whatever you want to call it. And I've been doing this for years. So basically, I think it's fair to say down to a day or two. Like for example, my HECO bill is usually it's due on the 14th, but sometimes it doesn't get withdrawn until the 15th or the 16th. But basically, at the beginning of the month, I know exactly like how much my expected bills are and exactly what day they're going to be coming out on. Is it the first? Here's the 14th, so HECO's probably going to be paid around here. Usually on the 15th is my cell phone bill. Car insurance is paid towards the end of the month. So these various bills that come out. So basically, to the penny, I know what's being spent because I have just monitored everything for a long time. And that's really what has put me in a position to then, from there, build up a dividend portfolio And what I started doing with the dividends is I would find certain stocks that I was interested in. Like this one is paying uh, is it going to give me an actual number? Here is, that's a growth. Let's go over here. Dividend per share. Looks like this is paying about $2.31 per year. So let's say I have a annual car registration of about $360. And for me, this is paid on December, divided by $2.31. So I need about somewhere over 155 shares if I wanted to use this particular dividend income to pay that annual bill. I closed that. Then on my spreadsheet, I would make note of that, and I would work on accumulating these shares. But me personally, I built up a lot of uh, monthly dividend stocks. So about half my monthly bills are paid through monthly dividends. So now I'm exploring more into uh, like dividend kings and dividend aristocrats to constantly be giving myself a pay raise. And then the other thing that I do is, like, let's say we talked about cell phone bill. Personally, my cell phone bill is $55 a month. It used to be higher, but as I was working on this year after year of um, knowing that, figuring out my basically my financial statement, and so then the lower my expenses are, generally speaking, faster I would be able to get out of the rat race. So I switched to using different type of cell phone providers and just accustom my life to attempt to achieve some sort of financial freedom versus have some sort of fancy material item that is going to wear out and break that I got to get again. So $55. Let's look at some. Of course, we could look at something like this is paying. This is a monthly dividend stock per share divided by 12. $3.06 divided by 12. You can figure out how much it pays per month, and then divide $55 by that. Another way to do it, which I really, really enjoy, is I have a variety of stocks I really enjoy selling options on. Some of them I'm selling with no real intention of acquiring the stock, and some of them I'm selling with an intention of acquiring the stock. It all varies on a variety of things because what I'm doing is I'm balancing my total cash, option buying power, and kind of as a worst case scenario, stock buying power. But for my first thing is first two things I guess would be cash or buying power first and then cash. So let's take a look at Tesla. because Tesla, you can sell pretty far away from the money and get a high probability of success trade. Don't need to look at a minute chart. All right, here's 6 months. Let's look at when we're looking at a year on the daily chart. It looks like in this area, it really got tested at the 220, and going back here down to 200 got tested all the way back here in, what was that, 2000. That's only 1 year, it can't be too far. So about a year ago. So around this 200. Okay, I'll just cut to the chase. I sell a lot of options on Tesla at 200, a 200 strike price. So for example, let's say I'll usually do it like this. I'll take well, one thing let's look at is current implied volatility. 60, about right around 60%. Not too bad. So let's take a look at, better get off those straddles. Take a look at 200 to sell the 200 strike for 1 day to expiration. Not really getting much out of that. And the reason why I like to do it this way, because the 200 has such a low probability of being assigned, then since it has such a low probability of being assigned, the shorter contract time that I do it in, then the faster the trade is going to be done, and that risk is off the table, and that premium is just in my pocket, and I'm done with it. All right, so here we are, 8 days. Looks like the highest it sold for today, 18 cents, lowest 13. Got a bid-ask spread of 13 to 15 right now. Maybe we could get 18 cents for that with around a 1% chance of being assigned. Really, really low probability. But what if I'm trying to get closer to $55 to pay my phone bill? Now, I don't know what your tax rate is or anything like that, but it is something to consider, because if you make $55 in option premium, some of that needs to be reserved for tax. So let's just use 20% as a number to work with. So 55 times 20%, 11 bucks. So we'll take that 11, add 55. So really we're going to be looking for $66. And we would have to do multiple contracts, or 8 times. There's about 4 weeks. There's roughly about, or is 4 weeks in a month. If we got 18 cents times 4, it's probably cutting it a little close. What if we went out to 15 days? Look at that. Now this is getting to be a bit better. Looks like highest it traded for today was 48 cents. You got about a 2% probability, almost 3% of assignment, which is really, really low. And just as a quick caveat, you could take a look at this number here, plus or minus 33.21. What's the current, what's the stock currently trading at? 295 and some change. 88. Let's round up. Let's just say minus 34. We'll round up to 34. Minus 34. All right, so whatever this is, somehow Thinkorswim's computer system is basically pricing in a possible movement of 33 and some change to the upside or the downside. And when we look at, if all that were to go to the downside, we're still only at 261. Right? It's just theory, but it's working for me. So that's a high probability trade of getting that 15 days, but we still, what do we need? More like $66. Maybe we could put on 2 contracts. That's a possibility, but then you really have to look at your option buying power if you have that. And then something else you can do is, what is this? Let's delete this out of here. Use your Analyze tab. Let's look at, was it 40? Was it 48? What was the high? Highest to trade today is 48. Let's just go for 45. We got $3 off on that. Selling 2 contracts. Looking at a little under $4,000 of buying power. But let's put this in the Analyze tab. Another, I'll just as a side note, okay, we did look at this. We got about, what's it saying about poor man probability about 2%, more realistic probability about 3% chance of getting assigned in that time period. You can look at the on set this price slice to break even. So based on this probability calculator, it's got a 100% chance of expiring worthless. Another way that I like to look at it, what's the date that this is trading at, or to expire, sorry, on the 25th of July. Go to the 25th, look down here, right? See that 25th? All right, where is 200? Way out of this cone of probability. So that's why I like the 200 strike price. Very, very low probability. So now let's look back at the Analyze tab. Put this to, change these set slices to there. This is 1 standard deviation, 2 standard deviations. We're a ways away. But let's take a look at the buying power effect if the stock price were to move, let's say to, here we go, we got 2 contracts on. If the stock price were to move down significantly from around 300 down to 238, buying power is going to be closer to 5,000. Do you have that? Do you have that available? Are you able to do that? What's probably pretty good is we got some support right in this area, so around 280. That'd probably be more realistic. So just working with a variety of these different nuances and probabilities, statistics with the charts, and attempting to set up trades that are going to, if it were to be filled here, we're getting $88.70, and then after tax on that, if we're just calculating like a rule of thumb of 20%, we still got the $55 to pay the phone bill, and it's in 15 days, so less than a month. So between doing trades like this that I have a high probability of success on, and dividends, and also having a major control over my expenses, knowing exactly what and when, what they are, how much they are, when they're going to come out, when I need that payment on. So, for example, my phone bill is on the 15th. So this trade would not cover, in theory, the way that I like to do it. This I like to, if I were to place this trade and I really wanted to use this trade to pay my phone bill, I'm not paying my phone bill in July with this money because the trade will still be open. I'll wait until the trade is completely closed out and then pay my phone bill. So if if I'm if I'm able to look a bit into the future and say, okay, this is what I need for August, these are the trades that I'll need to place in order for August, then I'm able to do that. And for me, it's pretty darn easy. It's not too difficult. But again, for several years, I'm living my life off a spreadsheet and looking at what my monthly bills are, when they're coming out, and just monitoring everything. And that is really my secret formula to being in a position where I'm calculating by the end of this month, moving into August, I'm just trading for a living. And then during August, if everything goes according to plan, I will move back to the Eastern Standard Time Zone from the Hawaiian Standard Time Zone, so I can be on the same time zone as the stock market and make more money. That's really it. So personally, I'm very open to doing other trades other than what I'm showing you, and not just having not only just having like a dividend portfolio, but it was really important for me to create a system of making sure my base expenses were covered, and then from there I can work at generating more money. Was that personally for me, I think knowing that all my monthly expenses are covered, it really gives a peace of mind instead of having this stress of like, how am I going to do it? Instead of going into panic mode. So I like this, even though there's a lot of people that say, "Oh, you're using $4,000 of buying power. That's such a bad return. You could do this, and why don't you do that? And you could do blah 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 blah." And all that gobbledygook that comes out of people's mouths, like, I guess the first thing that I would look at is, do they trade for a living? Are they making 100% of their income to fund their whole life through trading? If not, then I'm already a little bit like, there's more to the story. And then if they are, then what size of an account are they working with? So for the size of the account that I'm working with and everything that I'm doing, this is going to fulfill the this is fulfilling what needs to be fulfilled. And it doesn't mean this is the only type of trading I'm going to do, but it's consistent. It's much higher. It has a much higher degree of predictive ability, and it doesn't mean that I can't do higher ROI trades. That's the thing that I guess a lot of people have a difficult time comprehending, is that maybe these people are one trick ponies, but I'm not. I'm not a one trick pony. I have a dividend portfolio. I'm selling high probability option trades, and I'm sometimes I'm taking directional trades on futures just for a day or two. I'm depending on what's going on and what time I wake up. I'm selling zero DTE options on SPX. I'm selling leap options. Sometimes I'm just straight buying stock because I will buy enough shares and I think there's going to be a certain amount of move. So maybe a lot of people are one trick ponies and they only have one strategy that they can do. And I think that if that works for them, that's great. But honestly, I don't really think about other people. I think about myself and what works for me. And this is working for me. I don't know. I maybe know one, maybe a total of three people that trade for a living. Maybe. I don't even know that for sure because I've never audited their personal, financial statements. So I don't know for a fact if they make 100% of their income through trading. I think they might, but I'm not 100% sure. So whether it's the most efficient way or not, like, I personally don't care. Would you really care if you work 40 to 60 hours a week at a job you really don't want to be at? If you could find a way to not have to leave your house and be trading for a living, are you going to say no to that if it's not the absolute most efficient way of using buying power? Maybe you are. I'm not. I'm going to I am in a position where I've created aspects of my life where I'll be able to stop working, trade for a living, and then from there, when I'm have the free time to only think about trading, all the other meaningless things of my life will not be a consideration. I won't be thinking about solving problems for other people's businesses. I won't be thinking about how long is it going to take me to drive from here to there and how early do I have to leave and what's traffic going to be like and what's the elevator doing in my building today and is my lunch packed? All these different things that just don't matter to me that I have to make decisions about in order to go to someone else's business and solve problems for them. When all that's done, and I know I have my monthly bills paid, I can look at the remaining buying power that I have, which I have a considerable amount of buying power left over after I pay all my monthly bills. Then I can look at how to get more effective return on investment. But until all this piddly, meaningless stuff is still in my brain, and I need to make these decisions of what's the traffic like today, how early do I need to leave in order to be there, and it's Tuesday, so what's the parking going to be like, and do I need to park over there? Then I need to factor in how long it's going to take to walk there. I need to clock in on time. All that stuff, I think that's just garbage. But anyways, that's where I am at, and that's what's going on. You guys have a great day.